Hey traders, Raghee here, and in this update we're going to talk about waiting for your pitch. We're going to talk about a specific setup that we did in the futures and options room this morning, and that was a buy in the NASDAQ. So let's start everything off with the daily, because that's where day trades really are built. That's the foundation, and that is, what is the overall direction in the NAS? And clearly when we take a look at the JT trend, it is absolutely up. So that gives us our directional bias. I'm also going to be keenly aware that the two anchored VWAPs that I keep on all my daily charts are going to provide some downside resistance. And by the way, at the end of today's session, take a look at where we started to retreat from. So if you're a day trader and you're not looking at these key levels on the end of day chart, you're going to get blindsided by some very basic but important levels. And you can see just how well that worked here. Okay, so let's move on to the intraday and talk about the setup that we took. All right, so I have bullish bias, which means for the style of trading, I call it exhaustion trading or pullback trading, we're looking to buy off support. So however that resonates with you. That means that I don't want to buy with bullish momentum. I want to buy after the market experiences a brief amount of weakness. That's exactly what we had as we got lower into a tool that I created called the hourly price movement range. It's really just some arithmetic using high and low levels for the hour, and we add or subtract the hourly price movement volatility range from it. Pretty simple. I've always made the calculation open so you at least understand the logic behind it. That's a really important component of being able to follow tools, that they not be black box tools and of course be effective. So take a look at how we sunk into that range right in here. And then we got this little arrow. That arrow is independent of the range. That is the Darvis signal overlapping with the HPMR. Now, I would have loved to see that the V-score was absolutely down at the lows of support. That would have been great. But we didn't. It was close, right? So I'm more bullish than bearish. But there's our buy. Now, at this point, I don't know how high the markets are going to go. So it's really important that we pay ourselves while we can and not when we have to. And then once we see some really good clarity, typically after an initial balance breach, we can start assuming that there is a path of least resistance to the upside. And that's exactly what we took advantage of for most of the day. Usually what I like to do is exit about 10 minutes before the bells. That ends up being 3:50 p.m. And this was a fantastic trade that started off with some simple patterns and volatility levels. All right. Now, the next thing that I want to do is prepare for tomorrow. All right. So what do I want to see the market overcome tomorrow? Well, I'm going to re-anchor the 10-day VWAP, and I'd like to see the market above that 10-day VWAP. We clearly still have bullish structure. So if we're going to continue higher, levels of support like this, today's close, are going to be very important to stay above to basically form the base for higher highs. Taking out the VWAPs, using the VWAPs as support, also very important. So I'll be running the same playbook tomorrow. Hourly price movement range, so it's basically volatility forecasting, V-score, volume, standard deviation, and looking for those sweet Darvis patterns to confirm that inflection point. We'll be looking for buys just like this in tomorrow's session. Have a great one, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.